Good morning, traders and investors. My name is Roger Scott, and today is Thursday. It is September 23rd, and don't ask me where this month has gone. I'm still stuck in the summer, and I think I'm going to remain there for the remainder of this year. Anyway, as you can see here, the market's going to open up in a little less than 2 hours, about an hour and 50 minutes or so. On the Dow futures, we're up pretty good, about 168 points. The Nasdaq futures is up 80. Everything is pointing to higher, more upside. That's what I've been telling you guys for the last 2 days, and I'm reaffirming my position today. Everything is looking solid. Let me give you an example. Volatility, we're below 20. We're finally below 20. 20 is the threshold fear level, in my opinion. So anytime we're below 20, it's very solid. Put the call ratio, look, we're not even above 1 anymore. We're at 98. That's solid, and that's going into our random range. Remember, anything within this zone, it means randomness, nothing going on. Anytime we're above or below, it means something. But we're back. We're back. So volatility is good. Put the call ratio is good. The bond market, yes, we huffed, we puffed. We went all the way to the top after the Fed said they're not going to do anything, and we'll get into that in a minute. But we're already down 0.45. The market hasn't opened yet, and I think that's pretty much it for the Fed. They gave away the game plan, which we already know. There was nothing new in what they said. And most importantly, here's what you need to look at. This is really big. The fact that the S&P is breaking higher and making higher highs. Next stop, 50-day moving average. Now, the first time we had this downside, I was a little more concerned, and I'll tell you why. Let's see how the second day, we pulled down here. We had a breakdown. But the second day in the Nasdaq, we didn't pull above the previous high, but now we did. That's very bullish. Not only that, we're now at the 50-day moving average. That's very bullish as well. And just to give you a little taste, as you could see here, if you look all at the 11 major sectors, technology is still leading. I know we have some fragmentation. Consumer discretionary is not in the second spot, but hey, look at where we were a month ago. Look at consumer discretionary and look at technology. All the way 10th spot, second spot. That's August 20th. Today, that's 22 trading sessions ago. Today, technology is in first spot. Consumer discretionary is in second spot. But look, basic materials, industrial next to each other. Utilities, consumer staples are next to each other. And when you look at momentum levels, you also see that the market is starting to strengthen, not weaken, but actually strengthen. That's positive. Notice that? Look at that. It's turning, it's not really going anywhere. It's kind of bottoming out here. And again, as I mentioned, if we go a little lower, we're already at 40th percentile. So I assume we're going to go higher again. Everything is pointing to a higher market. Let's talk about the things that are going on in the world that is causing all this volatility. Asian share mostly higher on Thursday after Federal Reserve signaled it may begin easing extraordinary support for its economy. I think that's an understatement. $120 billion a month, you think? U.S. Central Bank indicated it may start raising its benchmark interest rates, which means lower bond prices, sometimes next year, earlier than it envisioned 3 months ago. It also said it'll likely begin slowing the pace of its monthly bond purchases soon. I'm thinking the bond market's going to start reacting to that if the economy keeps improving. And it is. Retail sales is good. Consumer sales is good. Discretionary sales are becoming better. The Fed's been buying bonds throughout the pandemic to keep long-term rates low. Markets were also reassured after Evergrande. I keep reading Evergrande and I'm thinking it's a Latin company, but it's a Spanish company. I mean, it's a Chinese company, but Evergrande sounds Spanish. One of China's biggest private deal developers said it will make payment due Thursday. But ultimately, most of what it has coming is priced into this market. Federal Reserve Powell, I'm going to predict the market 3 years into the future and make an ass out of myself. Oh yeah, I said it. He said the Fed plans to announce as early as November. And that's what I'm thinking, that it will start to taper its monthly bond purchases should the job market maintain its steady improvement. More than 80% of the stocks rose Wednesday. Yes, driven by tech, banks, consumer spending, consumer discretionary. Who's been telling you guys about consumer discretionary? Energy stocks also posted a solid gain. Communication utilities fell. Communication, I wouldn't worry too much about. Utilities falling is a sign that the market is becoming bullish again. FedEx slumped 9.1%, biggest decline. But the reason is more important than the fact that it declined. Reported sharply higher cost even as demand shipping increased. Why? I'll tell you why. Because many industries are contending with higher costs because of mixed labor and supply chain problems. Remember I told you supply chain problems were going to be plaguing us? I was reading the other day, and I want to tell you guys about this. Remember I told you that a lot of companies, this is before the election, when Trump made it tough for China, increased regulatory, a lot of the companies manufacturing in China moved to Vietnam. Well, now they're having a hard time because Vietnam only has a 6% inoculation rate from COVID. So now all those companies like Nike, a lot of shoe companies are screwed because they moved from China's manufacturing to Vietnam. So they went from tighter restrictions to worse medical. Go figure. Who would have thought, right? It worked for a while. So keep your eye on more bottlenecks, not just due to the supply chain, but also due to the COVID. It's a mess. It is a mess. As far as federal data, we've got jobless claims coming out in about 45 minutes. Not too concerned. China, global economy is overshadowing. And unless the number's like 450,000, I'm not really too concerned. Why? Because the number has been very, very solid for about 3 to 4 months now. It was really bad. It was like at 800,000, then it jumped to 500, then it jumped to 300, and it's been staying pretty firm. So anything around 350, 300,000 is pretty good. But I'm not too concerned because this number has been solid. Aside from that, we've got the PMI composite flash, and then tomorrow we've got Jerome Powell speaking. And existing home sales, housing starts have been very, 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 very solid. Now, the market, as I said, look at this. The Dow's now up 200 points. And remember, more bulls are going to start coming into the market as they see this worrisome fear period receding. So I'm becoming more bullish. And on that note, I've got a couple of stocks. Now, do you remember Wednesday when we saw this downside? I told you guys that the best thing you could possibly do is buy the following stocks. Let me show you this. Remember, we were talking about Moderna, NVIDIA, Dexcom, Fortinet, Gardner, West, and NVIDIA. Everyone except Monolithic that jumped up here. Remember, I was saying fading these stocks is the best thing possible because these are the stocks that are going to regain strength. Well, look at Dexcom. The market pulling down, it made higher highs. So if you followed me and got in on Tuesday, not Wednesday, Tuesday, at 550, 560, this thing is already at 570, and it's opening at 573.61 from what I could see right here. That's pre-opening. The bottom line is I got some more. NTAP. Take advantage of the last few days' weakness. It's going to come back up, in my opinion. 89. I think it's going to go to 94. If it breaks this support level here, if it breaks below 87, you get out. It's real simple. DT, Dynatrace. This was all it could pull back. Again, if it breaks this little yellow line, this 8-day or 9-day moving average, 68.90, you get out. You go long here. You ride this sucker till about the 74.75 area. We already talked about Dexcom. Probably missed that one, but I wanted to show you the beauty of buying the strongest stocks. Look at Dexcom. Let's go back one day. Let's go back another day. I hate when this thing gets stuck. Well, it's stuck on me. Anyhow, trust me on this one, Dexcom was the top stock. So Dexcom, Dynatrace, Uber. Uber, short opportunity. I think Uber's going to come down. I think it's going to fill this gap. If you want a little more safety, wait for it to trade at the 50-day line. But I think Uber's going to really come down, fill this gap. And if it takes out this high, this 46.75, you get out. But if it goes down, you take this all the way for the ride down to the 38 level. So you get in around the 44 something level, low 44s. If it gets to the high 46s, you get out and you ride it all the way to the 37. I mean, look at this thing. It's just been going down and down and down, making lower lows, and it just doesn't look great. Uber Eats is doing well, but people are just not going Uber. This Delta variant is causing a lot of havoc still. So I'm not holding my breath for Uber. So I like NTAP. I like DT. You probably already missed out the rally in DXCM because you didn't listen to me 2 days ago. and short opportunity on Uber. But the best part is everything is pointing to higher market prices, and that's what we've been talking about and calling ever since the market bottomed out a few days back. Now, folks, I know you've got a busy day. I know you've got a lot of stuff going on, but I've got something really important for you. There's a unique opportunity to join me today for a live VIP trade room session at Zoom. I'll open the trade room nice and early. It's going to happen at 2 p.m. Eastern time for people outside the service to participate, and it's not going to cost you anything. If you guys liked what I showed you today, oh boy, you're in store for some good stuff. Members attend a daily session with me Monday through Friday to go over market news, real-time stock analysis, even bonus trades. It all comes together in my VIP room. You can ask me questions. This is a rare opportunity to join me as we break down what's going on in the market, and it's not going to cost you anything. No hidden fees, nothing. And I'm really, really excited to see some new trades in the VIP room today. And I don't know when we'll open it up for non-members again. So make sure you sign up. The room is going to open at about 1:20. There's a capacity. There's no cost for this. I'm going to be giving out free trades, market analysis, update on what's going on with the market. It's all going to be included. There's no cost. There's no charge. Want to get an hour of me today at 2 o'clock? All you've got to do is follow the link. And I'm very, very excited about this. And I don't know when we're going to open it up again. Folks, space is limited in the VIP room. Do not hesitate. Click on the link below. Want to know what the Fed is going to be doing? Want to know what the bond market's going to be doing? Want to know what the put-to-call ratio is saying? Want to know which sectors to avoid? Want to know China? Want to know Europe? It's all going to be covered in my VIP room today at 2 p.m. Do not miss it. It's free. And folks, make sure to like this video. Subscribe to this channel if you're watching on YouTube. You got to stay ahead of the market by being the first to be notified when I post my next video for you. Bye. And don't forget, 2 p.m. VIP room on the house. Bye.